What can be more exciting than quantum computing, AI, and risky fantasy football quarterbacks? There's upside, there's downside. You get the full roller coaster ride. We're going to hit those topics and more today. With Steve on the call, I'll remind you,
Yes.
this is a financial education presentation. You must do your own due diligence on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Steve's alone. Steve, take us to quantum computing and our autopilot models.
All right, thanks, Mike. And hey, everybody, it's been too long since I've been on the mic with Mike, if you will. He's usually talking smack, so I needed to make sure that I'm on all of the Tuesday presentations, so there's not anything going on misspeaking about the CEO. Fortunately, I survived this week, but Mike will get to that here in a minute. So let's talk quantum investing. Before I share out the screen, if you kind of flash back to, we always talk about what an investment thesis and our level of conviction. Well, the investment thesis with quantum computing is it's the future, right? We don't know exactly what it is. We don't need to know exactly what it is, but if you think of, compared to the internet or AI, the real money goes in early to before you know really what you have on your hands. Think of like, the internet kind of blew up in 2000. Well, you wanted to be up in it, in 1992. So that's kind of where we are. It is high risk. There's no doubt about it. So, smaller amounts, not your whole portfolio. But if you want to get on what I consider the wave of the future, this is how to do it. In July, when I did kind of a state of the force for Ankerstar Wealth, I talked about three things. I talked about new money, which is Bitcoin. I talked about humanoids, which we invest through COID, and we also have a humanoid extreme. And then I talked quantum computing. So again, we were kind of talked about it then. Shortly thereafter, we released the quantum extreme model, which I'm going to show you today and talk a little bit about how you can invest in it. So, all right, here is the tab coming to share it out there. So what you're looking at is a screen from the Autopilot app. Is this the screen you see? No. It's our management screen from the inside. So you can kind of see up in the upper left, Ankerstar Wealth, and then we have a pull down. We have 11 portfolios on here that are live, a couple that are not, but the ones that have the cool graphics with it are all live on Quantum. As an investor, are you on as an Ankerstar Wealth investor? You're not on this platform. You're with us. But any of these we can make available to you. Mike's going to talk about Ego 10. That is actually part of one of our models. The Quantum Extreme that I'm talking about you today is not in any specific account for you. And you have to request it because this is super high risk. And it's done great. You can see that 49.22% in the max return, which is 2 months since you brought up this thing. But let's talk about the holdings. So when you don't know exactly how quantum computing is going to turn out, you want to take kind of a two-pronged approach. You want to try to pick some individual names, and then you also try to pick some thematic ETFs. You marry those together for performance. With the ETFs, the index funds, you don't expect them to keep pace with the individual names. And then when I say that, that's to the upside or to the downside, right? Because these things move. So if you're right, you're not going to make as much if you have the big ETF names as you would have if you had the individual names. But if you're wrong, it does mitigate the downside. And as you guys have seen throughout your investing history, no matter your age, the market will tell you sometimes you're right and the next day you're wrong. You have to zoom out, sit back and go, is the thesis still intact? If it is, you stick with the program. All right, let's look at the holding. Top holding. It's what I consider, again, I'm the portfolio manager here, so this is literally my own opinion. And there are people in the firm that disagree with me, and that's okay. It makes us all different. But the QTUM is not anybody's. It's not in our models yet, but I think someday it will be. 20% of the portfolio, basically, that's your number one quantum ETF that's out there. We also have a BOTS ETF, which is the fourth holding. We also have the ARC-Q Autonomous Tech. That's Kathy Wood in her ARC series, if you will. And then QNTM is a specific quantum ETF, but it's focused on biopharma. And it's, since we're on it, let's just talk about that's the only loser in the portfolio. So those are kind of your big ETFs, thematic ETFs that this portfolio is built out on. And if you really look just at the ETFs, up 20%, come down here to bots up 10%, ARTQ's up 23%, QNTM, the biopharma one, is down, and then the rest are individual names. So when you look at the individual names, we'll go with Rigetti. Mike brought this to my attention. I'd not ever heard of it till the genius that I call Mike Yunkman, which is why I hired him, said, get into Rigetti computing. That was 268% at least from the time he first mentioned it, because I'm hard-headed, right? I need to believe, so therefore I have to look at it for a while and seek everybody's opinion. And so I was even late, what I would call late, into Rigetti to find out what they do and learn more before I can invest. If it's the top individual holding inside this fund, and it's also in the Ego 10. So Mike can talk about that. Well, it's up 270%. Does it have room to run? Absolutely. It's not profitable yet, which when you hear that and it's like red flag, red flag, red flag. Well, easy, right? Amazon wasn't profitable for 19 years, and I missed out on the huge move up because I used to be like, you have to be profitable to get my money. Not anymore. You have to have a clear path to profitability. That's when the big money moves in. So learning from my past mistakes of sitting on the sideline with Amazon way too long. And I usually say, I'd rather be 3 days early than 3 hours late. In this one, I'd rather be 10 hours early than 10 minutes late, kind of, because that's how much I think this thesis is going to move. D-Wave, I won't go into the specifics of what D-Wave does, but up over 100%, Ionic over 100%. So you can see that the individual names can move. These are these kind of AI specific, quantum specific names. And then you get down into other names that you've heard of. Alibaba, that's the Chinese tech firm. Then you have NVIDIA and Google, kind of rounding out the individual names. They are up, but nowhere near what the quantum names are. So as I designed this portfolio, I did want the safety of having some big, American and Chinese names in there, as well as kind of the cutting edge quantum names out there. So, all right, it's done great. You look at a week, yep, up 4% in the week, 36 for the month, and again, up almost 50% in the 2 months. So if you want exposure to this, just talk to your advisor, reach out and say, hey, if you have an $800,000 portfolio, I would say like 40,000, like 5% would be the most you'd want to put into something like this. It's not mature, so there's a lot of risk. In this. JP Morgan, I'll close with this, Mike, then hand it back to you, but JP Morgan yesterday they came out with a headline of, multi-billion-dollar investment in future tech, and one of the themes was quantum computing, and that kind of led it higher. I think we'll see more of that, the bigger names kind of getting behind this. And then the last thing I promise, Mike, I will close, is when you see a name that's run up, 268%, and then you look at, okay, well, Google's up like 10,000%. So you can get, don't lose sight of the future because the things already moved some. So I think there's a huge amount of upside, largely because we don't really know how quantum computing is going to impact our society. All right, Mike, that's it. I'm going to stop sharing and over to you. I'll take your thoughts on quantum if you want to,
Yeah. I mean, quantum is the future of computing. It's almost like when we think of, we had the internet, and then we have AI, and then like, what's the next shiny object that's going to shoot to the moon? Quantum, and we're figuring out the one beyond that. So, since Steve mentioned the EGO stocks, that stands for exponential growth opportunities, and we try to pick a diversified set of stocks that could double or triple in a year. That's our goal. We're identifying stocks that could double or triple, in our opinion. Now, do they all do that? Absolutely not. But since we're using that criteria, we're generally getting small cap or mid cap stocks, of which I do proudly want to say that Rigetti was one of those. So if you are in our most aggressive portfolio, you did get a piece of Rigetti back in February, and as well as some others. So I want to kind of just, Corey and I did a stock by stock. Each day we released one of these, and we've already made some moves in and out based on performance. But let me share my screen, and I just want to review just a few of them, and you can see what they've done. So we went into February. So and let me just say, last year we did this same thing, and we picked up Palantir before it quadruple. Palantir was a success. We picked up Arista Networks. We picked up Toast. All of those more than doubled. So that's fantastic, but they don't all do that. So one of the ones that's done really well this year so far is Rocket Lab. So once again, future, definitely tech related. It moves aggressively, and you can see when the tariffs came out in April, believe me, all of these, I believe all of them were down quite at least 20%. So that's painful when you see it. The market goes down 10, 15%. These things were down 20, 30%. Very painful, but you can see since then, Rocket Labs has shot to the moon. I don't know. But anyways, so Rocket Labs would be an example of one that you probably have heard of. Natera, this is one that's moved more, it's not as exciting. It's had some downs and ups, and it's definitely up from when we bought it, but not by much. And hey, I'm not just going to call out winners. I want to show you one that went down. So this is gambling.com, believing the thesis that there's a lot more gamblers in today's world. So marketing, this is a marketing site, hasn't panned out. And this is one that we've just recently exited. So they're not all up. Another one to show our diversification, Steve and I and Corey are experts on elf beauty. Maybe not. At least we've heard of young people using beauty, and not to be mixed up with EL, which would be Estee Lauder. This is a younger demographic. You can see that this one was very painful after we first purchased it, around $100 a share. It went down into the 50s, and now it's up to 130. So some of this involves the stomach to sit through these losses and gains, and obviously it's up a nice percentage now. One other one I want to call out, SoundHound, another one had its downs, and it's definitely on its way up. And then Steve, I just got to show the graph of Rigetti. This one has been the best performer of them all that we entered back in February. And as you can see, for a good 6 or 7 months, this thing just simmered. It just kind of cooked a little, ranging between $15 and $20 a share before it went to 53. Now, maybe that's when Steve added it to the quantum model. That caused a massive buy on it. So anyways, there's some other ones. We will continue. We select a new set at the beginning every year, but then we also make adjustments as the year goes on. If we start to lose our thesis, if the company's disappointing, go in a different direction, not just because of what their stock price does, we will exit it and select another. We had a list of like 50 we went through and we ranked them. So we always have those in queue to like check this one out and see where it's going to go. But like I said, we try to diversify among aggressiveness. So an elf beauty is like almost the exact opposite thing of quantum computing. Anyways, what do you think, Steve?
No, I love this, and it's a nice, if you remember back to your initial meeting with your advisor, we probably talked core and satellite, and core being in a model and satellite holdings that are, a smaller position on the edge. And so if you want exposure to this stuff, like Mike said, and we have to foot stomp it, they don't always work. And even Rigetti can move up 10% or down a day, so you don't really want a huge chunk of it. But I love these names. I do consider myself an elf beauty. I knew that elf stood for eye, lips, and face, largely because I have 2 college-age daughters, so I pay for these things. So I might as well pay attention to what I'm paying for, and why not invest in it, right? I feel like I'm funding it, solely, right? So if I'm moving the needle in Rigetti through the model, I might be moving elf beauty off out of my pocketbook. So I love this stuff, Mike.
All right. So we love talking about ups and downs, or at least downs on Tuesdays, because that is when our fantasy football eliminations occur. So I will start off and we'll tie in a quick market lesson. In the West, Chris is the owner of the Minnesota Maniacs. He picked an Ohio State quarterback. It's such a dangerous thing to do. And an Ohio State receiver, Marvin Harrison. So I do like Chris's selections in the Ohio State. He also had a Raiders running back. And overall, Chris was the lowest scorer and thereby eliminated from our pool. It's getting harder as this goes on because the better and better teams remain. So we're sorry, Chris, you're eliminated. Now, the next one, and this one was extremely tough. In fact, I got text messages on this last night.
I bet.
Myself, my wife Trisha, and my son Spencer, we were fighting to be the worst one. We were fighting to be the bottom three. And people are texting, "Oh, I bet you there's a lot of tension in the Youngman household." And I got a son who's a diehard fantasy football player. I lean towards him, and I got a wife who let the computer pick for her, but she was doing very well until last night. And unfortunately, I had to get up and console my wife because she didn't stay up and watch these football games, that her team has been eliminated, which is really good for the rest of us because she has some good players and we all get to pick those players up. But what can we pull out of this lesson? So what I saw, and I'll just use the example of my son versus my wife and how they manage their portfolio. My wife doesn't worry about this. She doesn't really care. I just kind of help her figure out who's healthy to start, where my son is living and dying in this. How does that apply to investing? Some of you, probably the ones that are watching this, maybe are following your portfolio very closely. Other people are like, I trust that it'll work and it'll go forward. And my wife had a great quote last night as I laid down and I checked the standings right before I went to sleep, but the games were still happening. And I said, hey, it's really close, me or Spencer. One of us is going down. And she's like, I can't change anything right now, right? And I said, no. She goes, well, then who cares? Then I guess I'll go to sleep and wake up. And sometimes that's the way we need to look at the portfolio is we're invested in the right companies and we need to trust that it's going to work out. We will make adjustments, but you don't need to think about it every night. So I don't know, Steve, what do you think?
No, I agree. Set it and forget it. One of the coaching greats used to say, with coaching, you set the conditions for success, you put in the lineups and you let the players do their thing. Same thing with portfolio management. You set the conditions for success by putting the best companies in there and then let them kind of do their thing. But I also will say that, I like with markets. One of my favorite quotes is none of us is as dumb as all of us. So markets do move. You have headline risk. Friday the world ended because Trump tweeted about China, and then Monday he saved everything by tweeting about China again, saying it's okay. So, things can move. So the markets are random. Fantasy football is like a 10x of the randomness, it seems, with trying to pick that. So I equate it to poker. The same people do win over time, but certainly on the short term, week to week, or even in our competitions, not always the best person ends up on top. Unless it's me, then it's the best person.
Awesome. Well, thanks everybody for tuning in. We will talk to you later. Bye.